started with cryptocurrency trading is what we are here to handle out today. And for starters, what exactly is cryptocurrency trading? It's no English, it's no too much grammar. It's simply or basically utilizing crypto assets to buy or trade against various other crypto assets. But then the truth of the matter is that it is not as simple as it sounds. That's just the truth of the matter. It's not as simple as it sounds. This thing, understanding it, I know very well you might have seen persons who promote cryptocurrency trading as a very, very profitable venture. Quite well, it is profitable, but the truth of the matter is that when you talk about cryptocurrency trading, it takes knowledge, time, effort, and skill set for you to be able to get it right in this industry. And very well, in my time, over in the 6-year period I've been indulging in this industry, I would look to try as much as I can. To be very honest, I can't teach you everything you need to know about cryptocurrency trading in 3 days. No. I really can't. I'm going to be honest, because very well this is something that takes time. But at the end of this discussion, I promise you one thing, which is this. You would be from that point of, oh, I don't know what cryptocurrency trading is, or maybe I have started cryptocurrency trading a little bit, but there are certain, when it comes to technicals or certain fundamental related aspects that are still unclear to me. That should be the category you are in for signing up for this webinar. And I'm here to tell you that at the end of this 3-day session, we'll be moving you to that section where you now have, I think this is still showing. I thought maybe it wasn't showing. We'll be moving you to that point where you now have at least some level amount of rigid knowledge to indulge in cryptocurrency trading. Take trades and execute trades by yourself. Interpret and understand market jargons very well, because at this point in time, some of these things may be jargons. So now, cryptocurrency trading, as I have shared, is simply buying and selling of this asset. But now, a very important, I call this risk disclaimer. Risk disclaimer. It's something that's very much important, and the bulk of your tutors, mentors, idolos, they forget to tell you about risk when you are doing crypto. Why? Because you that's sitting listening to me as a human, you are very much not aware of curtailing your greed excesses. We as humans generally, psychologically, are greedy people. So very much the crypto industry being posed as an industry that can maybe earn you some bucks, get you some level of profitable means of income or something like that, becomes pushing to take risk, becomes pushing to make this money, becomes pushing to get this profits. But here's the truth of the matter. The truth of the matter is that in as much as you are eager to make profits or proceeds from trading, do not undermine or take out the fact that this is a very risky industry. Yes, you heard me right. It is also a very risky industry. You have people losing good amount of money in short amount of time, just as persons are making good amount of money in short amount of time. Now, what is the differentiating factor? The differentiating factor there is knowledge. Why? Because persons who are taking trade actions out of knowledge and persons who are taking trade actions out of vibes and inshallah, at the long run, time will tell to see who actually knows his or her onions and who would actually make the most of this industry. Because the truth of the matter is that it's very easy to make money. Yeah, you can fund an account today, tomorrow, you maybe click a mistake buy button and you're in profits. Yes, it happens. But that doesn't mean that every day is Christmas. No, not at all. To keep on consistently harnessing the benefits of this industry, you need to run with knowledge. And very well today, as I have shared, we'll be walking you through the knowledge base that you need in understanding the basic concepts of this trading thing and getting you started with all of this. So now, to start the pace, organized, to have it be that Divine is not rushing what he's teaching or what he's saying over here today, I would like to talk about a little bit of introductory concepts. That's why I'm on this marker, to be able to explain some of these concepts clearly, categorically to you before we now move into anything technical, anything practical, and anything that's more of a direct hands-on tutorial. So before I do that, I would like to break the program schedule for this event. So now, for today being day 1, as I have shared, I'll be walking you through some of the basics, the need knows about cryptocurrency, introducing you to some of these concepts, terms, and all of that. Then familiarizing you with how you can buy your first crypto assets today, and also, if time permits us today, also we will go through the basic, introduction. We'll just talk about trading a little bit, just a little bit, to be able to, have you flow from this start point to the end point. So please ensure that as you have attended day 1, you will stay and attend till day 3. Except you want to waste the time that you are spending here. If you're going to waste the time that you're spending here and waste my own time by attending after today and tomorrow you are not here, next tomorrow you are not here, please, I know you joined this webinar, but we can leave, to be honest, because it will do you no good with a half-assed knowledge. It will do you no good with a half-assed knowledge. So please ensure that signing up for this webinar, you were very much prepared with spending 3 days of your time to learn about this cryptocurrency industry. So now, to get started, I will go through, because I know very well that there are persons who are newbies, like very, very, very newbie, and there are persons who have amassed a couple of knowledge and stuff like that. So some of these basic concepts may be a little bit known to the persons who already have some level of knowledge, but please, there may still be a couple of other things that you can learn, because knowledge never ends. I myself, yesterday I learned, day before yesterday I learned, today I learned, tomorrow I will learn, and I will not stop learning. Why? Because in an industry like this, I circled out the need for knowledge. So now, over here, we're going to just run through, because I'm not trying to spend my time and waste your time going over information that is very much available to anybody on the internet. So I'm just going to be spending the next few minutes breaking through the concepts. We'll be sharing all of these basic concepts. Then we will now walk through getting involved with exchanges, getting involved with wallets, setting up your exchange account, and performing your first buy transaction as a crypto enthusiast. That's if you've not done that, and if you have, very well, you can still stay till tomorrow. Very practical guides on the concept of trading, understanding basic fundamental analysis, technical analysis, getting familiar with market structure, trends, support, resistance, because there's quite a couple of other additional technical concepts to be learned, but we are trying to keep things basic, you understand? So I'm not trying to box you up with too much cloud of information. I'm just going to try as much as I can to give you what will move you from start to the next point as regards doing this crypto thing professionally or doing it a bit more better. So now, first things first, what is crypto? Please, 1 second. This might not be it, but if anybody who is on this discussion can simply just type out what this is in like 1 minute, what cryptocurrencies are, or what is cryptocurrency. If anybody can do that ASAP, so that I know whether or not these guys are good or whether I should let you take the mic and come and tutor us on this whole topic. So now, for basic starters, cryptocurrencies are simply a means of exchange. Means of exchange is money, just the same way there is 1,000 naira, 2,000 naira, 3,000 naira. That is the original concept of cryptocurrencies. But very well, that was not where it started, and very well, the concept of cryptocurrencies came to limelight in the year 2008/2009, courtesy of Satoshi Nakamoto, the pioneer programmer who programmed the codes and wrote out the codes for the first pioneer cryptocurrency, which is Bitcoin. And Bitcoin gave the rise to and gave life or gave rise to various other cryptocurrencies, majorly Ethereum, which then became, I like to call Ethereum the mother of all cryptocurrencies. Why? Because it's recently that we see a couple of cryptocurrencies coming into light, but in the early days it was Ethereum that was the main reproducing blockchain where various other projects and platforms could build their ideas upon. So now, we've talked cryptocurrencies, Bitcoin, Ethereum. Please, I'm trying to make this simple. I'm not trying to complicate it. I'm not trying to complicate it. I'm just trying my possible best to break this thing down with the time we have in this 3-day period. So I might be going through a couple of things, but please, we will be having a question and answer section toward the end of this discussion. If there are any concepts you do not understand through while this tutorial process is going on, then you can make it known and keep it down and make it known, and at the end of this discussion we'll go over it again very, very well, like ASAP. Now, cryptocurrencies, as I have said, are simply cash, money. But the truth is now, these are digital currencies. These are digital currencies in the sense that they are not currencies that you can see. You can flip a 1,000 naira note, you can see I wanted to say 2,000 naira note, sorry. You can see a 500 naira note, you can see a dollar note, you can see $100 bill, but very well, there is no physical cryptocurrency in existence. Why? Because there are digital currencies that are run on the blockchain. Now, there are digital currencies, that are run on the blockchain. Now, the blockchain is the foundation. When you are building a house, dig out your foundation before you build out your walls and your roof or anything. So the blockchain is simply the foundation to the build of cryptocurrencies. And what is the blockchain? It's no English too. I'm trying my possible best. I don't know how to. I'm confused because I'm supposed to be speaking grammar, blowing grammar for you people, so that you feel that this guy knows what he's saying. But I'm trying my possible best to make this thing dumb down to the basic level. So just stay with me. I will try as much as I can to have it be that yes, you get this clearly, proper. So now, the concept of the blockchain, what the blockchain is, would most likely have us understand. Sorry, I think this is a bit down. All right. The concept of the blockchain is one which a couple of persons like to blow grammar and talk, but simple, I will just tell you, the blockchain is a ledger book, like this. The way this book is, that is how the blockchain is. It is a ledger book, and I will explain practically or better to help you understand what it is. Now, it is a ledger book where records of transactions and activities are stored, and also has the technological ability. Hey, I'm speaking grammar. Please, if you don't understand, don't forget, keep your questions at the end. I will attend to it. Thank you very much. Let me go over what I was sharing. I'm just trying to not confuse this whole grammar because this one that I asked of cryptocurrencies and you people are giving me minor answers. That means there is a whole lot of breaking this thing down into understandable concepts for you. But no worry, Divine Crypto Day for you. I will do that as we go. So now the blockchain, as I shared, is okay. Let me try to make it easy. I will give you a professional description and I'll give you a layman description. So it's easy. The blockchain is simply a digital decentralized ledger used to store records, actions, or activities that are performed underneath or upon the software codes and prerequisites that any blockchain was built upon. So now, calm down. Let's try to break it down. So it's simple. Let's say you have a store where you sell items, you sell books, you sell shoes, you sell clothes, you sell anything. And you have, your record book that you keep your day-to-day sales, transactions, and all of those into. Okay, sorry. You have your, record books where you keep your day-to-day transactional records and all of those things, your sales track and all of those things, your stock in, stock out. That is like a book like this where you keep all of those records. So now, the blockchain is just like, let's say, this book. But then here is the thing. I think I have to sit down so that I can hold this book comfortably and explain what I want to explain for you. Now, it's like this book where you keep the records of every transaction that go on in that store. Now, it is linked by blocks, and these blocks are like singular pages in this book, where today, 28th of January, you write your records, tomorrow, 28th, you write your records and all of those. And the thing about the blockchain is that, remember, it is not physical. It is all a digital stuff. And now, one more thing is, I don't know about you, but I think back then in school, at the end of this book finishing, if you are a serious student, you will pad it with another book to continue writing what you're writing. I think most especially in biology notes, yes, biology or those bulky notes, yeah, something like that happens. But over here on the blockchain, you have a chance to pile up those records continuously, consistently, and have it be that each record is not pulled from the next, that these records are connected through a process that's called cryptography. And the concept of cryptography is basically keeping records with code language. So maybe, for example, I want to write the records on this book. I am now going to write them in a language that maybe software programmers can understand or something. This is like a basic walkthrough on the blockchain. So now, just as it is used for record keeping and all of those things, that's where the connection with cryptocurrency is now coming. Just as it's used for records and all of those things, people also are able to, do a couple of more things on this whole blockchain technology, and those involve, or things like that involve, the creation of cryptocurrencies. Yes, the creation of cryptocurrencies is something that's done on the blockchain. And talking about keeping records, there are a couple of other things that can be done on the blockchain. For example, the US election, the US election that just concluded, and I don't even know if you guys came across this news, but I did, which was Donald Trump was sharing about I think, signing a legislative law or legislative crypto executive bill to pass or look into the use of blockchain for certain public records. Now, not to also, make it sound jargon, it's basically those records or whatever records that are supposed to be manually stored and, kept are now transferred into a digital platform or a digital ledger to keep these records alive for a longer time. You understand? Keep these records alive for a longer time. And one of the other things that I wanted to share about other possibilities or things that the blockchain can do is voting. When you, as a system, organize voting procedures, the votes you cast or the votes of every other person can be recorded on a blockchain and it will be publicly viewed by everyone. Why? Because these are the other traits of the blockchain, because the blockchain is a digital decentralized ledger, and in its decentralization where there is no single authority who holds 100% access or 100% control over the blockchain network, it makes it open, it makes it public for persons to overview certain information and stuff like that. So very well, in cryptocurrencies, talking about them being digital money, it's basically they are built on the blockchain and their activities when you send, when you receive, is also stored on the blockchain. So now, with this information, I want to just use one scenario to give it a little bit of light, which is banking. If you send money to someone and the person is telling you, oh, I've not received this money, my network is still hanging or something, you at that point, you don't know whether the person is lying to you or not. You don't know whether the person is lying to you or not. Why? Because there's no way you can see what's ongoing with the person's activities, what's ongoing with the person's transaction history and all of those. So, but then on the blockchain, it's a bit more different. Why? Because every transaction is publicly visible on the blockchain. I think this board is filled up. Every transaction is publicly visible on the blockchain, having it be that you and I can only overview, emphasis on only overview, yes, because you may now think that because you have access to public visibility of the records or whatever information that we are talking about here, then most likely there will be a case of security breach, there will be a case of, let's say, fraudulent activities from an external point. Quite well, some of those things may happen in extreme scenarios, but on a good day, the blockchain is one of the most secure mechanisms that has been created. Crypto itself is anonymous. Blockchain itself is a secure platform. So, what am I meaning? What I'm meaning is that this technology takes security serious. This technology takes security serious. Now, I think we are come up with some of this basic talk around blockchain. We'll move into exchanges, wallets, and some of all of those next important information. Please take note, I shared that over here today, I'm not trying to walk you through every step that you need as a crypto trader or an enthusiast who wants to be a trader. Why? Because I can't very well box all of that into a 3-day program. But I share that what we are going to focus on here will be fundamentally important to anyone who actually wants to understand cryptocurrency trading. So very much I'm going to be filtering out a couple of things. So maybe you might have attended one of your those program or paid for somebody else's course or something, and maybe some of these things Divine is saying, or some of these things the person is saying, you're not hearing them here. That's your own business. What I'm sharing here is very much fundamentally important. It's not trying to walk you through everything that you need to know, because if you have known everything, you will not be here. Now, Moving into what's next, we talked about cryptocurrencies, blockchain, Bitcoin, Ethereum. Now, one next thing, please pardon me 1 second, then forgotten to share that. Day one, we're walking through this. Day two, we're talking about a little bit of technical analysis thing, trading, and all of those. Then day three, I will now walk you through a practical approach on interpreting trade signals, executing trades, and familiarizing yourself with the user interfaces of exchanges to be able to take trade actions, execute trade calls, and become familiar with what's important. So now, just as we have cryptocurrencies, we also have what we call altcoins. We have altcoins, we have stable coins, we have shitcoins, and or we want to call them meme coins. So now, altcoins are basically an alternate of Bitcoin. Yes, they are basically an alternate of Bitcoin. Why? Because these were created after the invention of Bitcoin, picking excerpts from the creation process of Bitcoin. So very much there's a whole lot of familiarities with Bitcoins and altcoins in the sense that the technology is, we call it similar. Yes, the technology is similar. And altcoins are simply, as I said, alternate coins. That's the meaning of this word, alternate coins. And these are like coins that are alternate to Bitcoin or in the whole cryptocurrency industry. And for that, we have coins like Solana, Arbitrum, TRX, SEI, and even Ethereum is also an alternate coin. Now, next is stable coins. What are stable coins? Basically, as the name implies, stable coins are assets or cryptocurrency assets that are stable and have, let's call it, a fixed or rigid price, because most times stable coins are pegged to the value of the dollar. So what I'm trying to say is that altcoins now, or bitcoins, how do I put it? Bitcoin has its price. Yes, I think currently the price of Bitcoin should be anywhere below the 100,000 mark. The price of these altcoins are different. I think Solana is about above 200, SEI is about 4 point something, Ethereum is around 3,400, TRX should be standing anywhere around a cent or a dollar value, if I'm not mistaken. So now, what I'm trying to say is that Bitcoin has its price, altcoins has their price, but here is one thing: the cryptocurrency market is a volatile industry. I don't know if any of you have seen charts, seen all these trader guys, or even your own normal apps, you see all of these lines. It is the price of these assets that is fluctuating. It is going up, it is coming down, it is going up, it is coming down. That is how the nature of these assets is. That was why from the onset I made it known that this is a risky endeavor in its entirety. But truth be told, don't worry, knowledge will set you free. That's just the truth. Knowledge, practice, and involvement of indulging cryptocurrency continuously will get you to that point of, oh, I don't know this thing, and now I'm more advanced, I'm more knowledgeable about this thing. Why? Because I want to say something before I go back to what I'm sharing, which is this. It's not about mentors, it's not about courses, it's not about information, it's not about capital. There are two things that involving in the cryptocurrency industry or in trading in the financial market industry. There are two things that are very important factors to getting better at it, and that's action. Action on knowledge and timing. Action on knowledge and timing. Don't worry, please, I'll go back into this. I just want to share that. Why? Because the talk about this price or the assets being volatile, and you needing knowledge, you needing understanding, expertise to be able to delve into it, doesn't now mean that because maybe you paid somebody, maybe because you watched a video, and let me tell you, even this one that you are watching like this, yes, it's not a guarantee. It is not a guarantee. Why? Because the popular saying, if you take a horse to the river, you cannot force the horse to drink the water. So in that same case, no mentor, no tutor, no course, no video, no nothing will have you understand what you need to understand about crypto. It is only through practical engagement by yourself, actionable trading and understanding or seeing the results or outcome of your trade actions, your trade decision, that will progress you in this industry. So please, sorry for that break in transmission, but before I continue, I'd like to know if you are following me on this discussion. So if you are following me, drop off an emoji or drop off a comment on the community. Let me know that yes, these persons are with me. If you are with me, drop off your comments, drop off your emoji, and let it be known that yes, you are very much getting the meat out of this discussion. Because if you are not getting the meat out of this discussion, I can click that end button and we will call it a day, because I will know that yes, I am wasting my time and I am also wasting your time. So very well, keep it coming, keep it coming, keep it coming. If you've been on this discussion, I think this is like 45 minutes into this discussion. We've shared a couple of things that needs to be known. All right. So now, let's continue from where we stopped. Sorry for the break in transmission, my people. Cool, good. I was saying stable coins. Now, the differentiating factor between altcoins, bitcoins, and stable coins is this. Stable coins, just as their name is implied, have stable prices. The price of Bitcoin might be this today, tomorrow it is that. The price of Ethereum might be this today, tomorrow it is that. But the price of stable coins are forever stable. Wherever you know that this is the price of value of this asset, it is supposed to still stand as the price value of that asset today, tomorrow, and I wanted to say yesterday, today, tomorrow, like see that Jesus. But very well. Some of the examples of stable coins are USDT, DAI, USDT and DAI. These are examples of stable assets that have their prices fixed. The price of one USDT would always remain one USDT. Come rain, come shine. It might maybe move a little bit, 1.09 cents. But I don't really even think I've seen USDT below $1. Okay, yes, I have. I think during the lunar crash. Yeah, I think during the lunar crash, yes, the price of USDT dropped a bit below the $1 mark. But it is very, 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 very rare to have that price drop. Now, next is shitcoins and meme coins. So now these are two similar industries or two similar words. I might not differentiate them, I'll just categorize them as one. Shitcoins are basically assets that, as the name implies, are shitty. And meme coins are also meme assets, which is assets that are memes or came to be about as memes. So now, the thing is this. Bitcoin, Ethereum, Say, SU, Solana, TRX, they all have one thing in common. They all have one thing in common, and that is that as cryptocurrency, Please let me know if you can hear me. Please, please, please. All right, I think my mic is still intact. Let's proceed. All right, I was saying, as cryptocurrencies that they have a use, they have their use cases, they have their utility purposes. That is to say, Bitcoin was created to bridge the gap between cross-border payments. That issue where somebody wants to send you money from abroad, or you want to send someone money from here across to the other part of the world, and you have to go through a very rigorous process. Western Union, MoneyGram, all of those things, they take time for you to engage in. That's literally the concept that Bitcoin came to clear. To have it be that from here you can make payments to someone in Australia, make payments to someone in Zambia, make payments to someone in Uganda, in various parts of the world at a go without stress. That's the utility of Bitcoin. For Solana, for Ethereum, as I shared previously, Ethereum claims to be as the motherboard of cryptocurrencies where other crypto assets can build their programs, codes on. Then platforms like Solana and Sui also have certain use cases that involve and indulge in two persons building on them. I don't know if you heard of the Trump coin. If you heard of Trump, please make it known. If you heard of Trump, this recent election period. If you did, let us know. Let us know. Okay. Now the Trump asset or the Trump coin was launched on the Solana blockchain, I think through Jupiter, on Jupiter, if I'm not mistaken. That was where the Solana blockchain was launched. So I'm just using that shares to show that, okay, yeah, some of these blockchains, they have their use cases. They are supposed to be used for something. So now let me give you an example. Over at Divine Trader as a brand that aims to enlighten the populace about the crypto, blockchain, and Web3 industry, and also provide them with financial services for persons who would want to convert crypto assets to Naira and otherwise. We now decide that as a brand or as a business, we want to have a token, we want to have an asset. Well, as at this point, I'm going to be honest, there is no thought, there is no vision, there is no roadmap for us at Divine Trader in pulling out a token anytime or anytime soon at all. So, but now I'm trying to use that to, share or walk you through a concept. If we now say, as this brand that we are, maybe you want to create a token where we use this token to reward our users, or have it be that our users maybe stake an asset and we can use these tokens as collaterals, or whatever use case we may have for the tokens we want to create on the blockchain. Where my point is going is that every cryptocurrency has to have its utility, its purpose, its solution that it is providing. So now, but those meme coins, these brothers here, they like free life. They don't engage in that, which is why I want to correct something to somebody or someone who maybe has fallen victim to something here, which is buying shit coins, meme coins, or maybe all of these celebrity assets, the Trump token, the Melania token. I think a concept. If we now say, as this brand that we are now, maybe we want to create a token where we use this token to reward our users, or have it be that our users maybe stake an asset and we can use these tokens as collaterals, or whatever use case we may have for the tokens we want to create on the blockchain. Where my point is going is that every cryptocurrency has to have its utility, its purpose, its solution that it is providing. So now, but those meme coins, these brothers here, they like free life. They don't engage in that, which is why I want to correct something to somebody or someone who maybe has fallen victim to something here, which is buying shit coins, meme coins, or maybe all of these celebrity assets, the Trump token, the Melania token. I think Davido too, yes, had a token. All of those tokens are meme coins, and maybe most likely you bought them, you've lost money or something, or maybe you see people complain about it, robbing them or losing money. Well, one thing I want to share is that there is an approach to understanding these two, which is that hence that they do not have any functional, solid value, use case, or utility. It is vibes and inshallah. That's just the truth. It is something that if you are doing at a very risky point. Oh, you are buying meme coins. You cannot buy meme coins today and say you want to sell it in the next few years. No, I have assets I have got from the 2021 bull market. If I check that wallet now, it's gone, it's finished. Why? Because these assets do not have substantial long-term value. So I'm sharing this and saying this to you because sometimes, or from this discussion now, you now feel, oh, I don't really learn about this crypto thing, but I'm learning about this crypto thing a little bit, and I want to now do it all, go out, go all in. And in this incoming bull run, one of the narratives that is selling 100% wilder than any other thing is the concept of meme coin trading. So I want to warn you, I want to say it to you. Shit coins and meme coins, they are profitable, yes, they are, but they are very, 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 very risky. Take it from me, this is someone who made a good amount of money, 4 or 5 figures in the previous bull market, and also lost a couple of it. I'm telling you that they are very much risky scenarios. So if you are a newbie beginner that wants to see crypto as something that makes sense and not sweat for divine for involving and indulging you into this whole crypto thing because you lost a lot or a ton of amount of money engaging in shitcoins, please understand that it is a very risky venture to indulge in shitcoin or meme coin trading, and this should be something that he said he's still recovering from Trump. He will triumph, my chief. Now, back to what I was saying. This is something that's very, very risky, and it's something that if you are engaging in, you engage in and out. You buy the assets, see your proceeds, go back out. That is the only way to survive this whole meme coin trading thing. So now, please, the next thing on our list is wallets. Because I don't have a wallet here. The use of normal wallets to store your billions and millions. Yes, that's the same way wallets work in the crypto industry. Wallets are used to save, store. What I want to say is contrasting due to my length of understanding, but I will say it in very easy to understand terms and maybe draw out the silver line so that you understand what I mean. It is a well-known talk that wallets are used to store, save crypto assets. But this was something I was familiar with in my early days or early periods of knowing this whole trading thing. But over time, it now got to dawn on me after much more study, research, and learning process that wallets don't really even store your assets in crypto. Yes, they don't really store your assets in crypto. Why? Because the assets itself is stored on the blockchain. The asset itself is stored on the blockchain. Yes. So basically, wallets are just software prerequisites or digital creations that help you interact with your assets on the blockchain. Let me just put it that way. I wanted to share, wallet was used to save, store, spend crypto, but that may be a wrong narrative, and I think I will give narrative that be wrong information. So now, they are stored on the blockchain. That's cryptocurrencies, and wallets help you interact with them. And for wallets helping you interact with them, sorry, we have about 35 minutes left on this discussion. I wanted to have this discussion go for 2 hours per day, but I'm looking at the length of time to spend with you, because I would not want you spending too much time. But let's see how we can do within 1 hour, 30 minutes to 2 hours on the 3-day schedule for this discussion. I want to know, is that okay with you? If that time allocation is okay with you, you can let me know. Now, I was sharing that wallets help you, interact with your assets on the blockchain and stuff like that. There are 2 types of wallet, or various types of wallets. We have hot wallets, we have cold wallets. Yes, we have hot wallets and we have cold wallets. Now, hot wallets are wallets that are linked to your exchange, maybe Binance, Bybit, or something, KuCoin, what have you. Wallets are, hot wallets are those wallets that are linked to exchanges. But then cold wallets are either hardware wallets that we don't have access to. This one now is for the investors, our big boys that don't want to be indulging and involving in their crypto assets. They just want to buy these assets and hold it maybe till their kingdom come. They don't want to be interacting with it. You get yourself a cold wallet. It's most likely like a flash drive or flash device that you link with a platform. At this point in time, I think ledger wallets are like the why call them trusted? I wouldn't say trusted, but I would say the most prominent hardware wallet providers in the crypto space at the moment. They provide you with all of those hardware wallets to store or keep and interact with your crypto assets. Now, next is exchanges. Yes, exchanges. Binance Exchange, Bybit Exchange. This, that. Basically, exchanges are also an important concept in the crypto industry, and we currently have 2 types of exchanges. We have the centralized exchanges and the decentralized exchanges. We call the centralized exchanges SEX for short, and the decentralized exchanges DEX for short. Now, centralized exchanges, the likes of Binance, KuCoin, Bybit, BitGet, and all of those are centralized exchanges. And these centralized exchanges are called centralized exchanges because you have an entity that's overseeing or guiding through the operational process of the assets in store of the exchange provider. So what I'm sharing is, the guy, I don't know if you've heard of him, a little bit of persons who are involved with crypto will know who CZ of Binance is. He was the previous CEO of the Binance team. Now, the thing is, CZ and Binance as a whole have some level of custody over every asset that is stored or saved on their exchanges. They do this because they want you to be safe. They want to, have you be that, yes, they can account for your assets. Maybe when you or the government requests access to some of this information, a couple of people frown at this because the idea of cryptocurrency is supposed to be decentralized. So why the hell am I being told that somebody is overlooking my assets? Well, it's for your safety, very well, because in my year of experience, I've never lost money on a centralized exchange by mistake. Yes, because somebody is keeping it from me, it doesn't mean anything will happen to it. Or because these platforms are keeping it, doesn't mean anything will happen to it. Only at the instance where there is a crash of that platform. And so far, I think the only platform that has crashed in that height of exchange is the FTX platform. And FTX crashed, I think that was about 2 years ago, with assets going into thin air for the users. So now, that is one of the benefits of centralized exchanges, and the downsides to it being that, for the benefits, you are much more assured of a safer or more secure storage system for your crypto, but then you do not have 100% custody or access. It's not like you don't have access to it, it's your money. Yes, you have access to it, yes, you can use it. But what I'm sharing is that, the way it is orchestrated, centralized exchanges can still hold your account to ransom. The way your bank will freeze your account, the way your account officer will tell you that your account has been or is on hold or something like that. And that interaction goes on with centralized exchanges. And I'm just going to be honest. If you want to do crypto sane, like if you want to do crypto calm, wear suit and tie and do it very, very, very easy, or very much solid to minimize your risk and stories that touches the heart, go with centralized exchange more and ensure that yes, your activities are indulged in centralized exchanges better. But now there are a couple of persons they call degenerates. Those are the persons that are engaged with decentralized exchanges. For decentralized exchanges, we have platforms like Trust Wallet, we have platforms like SafePal that are decentralized wallets. And what the difference here is this. Decentralized wallets kind of give you custody or access to your assets very well. So it's more like this is my money. You are holding it on it's more like, okay, this is my money that's being held on your platform, but I still have rights to the entire holding. There is this. Decentralized wallets kind of give you custody or access to your assets very well. So it's more like this is my money. You are holding it on it's more like, okay, this is my money that's being held on your platform, but I still have the rights to the entire holding. There will not be a case where an account officer freezes your account in a decentralized exchange. In a decentralized exchange, there will be no instance where you want to engage with the customer care in a decentralized exchange. Why? Because the key to storing or holding these crypto assets is now in your hands. The key to holding these assets is now in your hands. Now, I believe this section cuts across towards the end of one section, which is the whole talk about theoretical jargon and making you familiar with some of the new concepts, context, and information that the crypto market is all about. So please, I still have something to share, which is the concept of network type, wallet addresses, and all of that. But because we are looking at time and we don't want to overstay our welcome, I would share that when I am walking us through the next bit of what we are doing here today, which is buying your first assets and buying your first assets. We'll be going through a live process. I'll be making transactions, funding up an account, setting up a wallet or an exchange over here in this next step. So, but now, if so far you have picked anything, if so far you have picked anything on this discussion or from this discussion up until this point, please, you owe it to me. Yes, look at my face. You owe it to me. I would like to have a review so far. Oh, a shout out. I learned about this basic concept of trading from Divine Crypto, from Divine Trade Hub, and this was what I learned. Just a 1-2 liner. You can maybe share it here, share it after the discussion across your socials. But please, I want to say it. You should not deny it. It's a free project. So if you are being asked to do that as the transactional, currency for this discussion, I don't believe we charged you. Most likely you cheated us, because whatever you learned here today is already paid. It's something that I should be paid for to do. But very well, we are organizing the course of the Divine Trade for free. So please, I would be wanting to see some of these reviews starting from this community. So please, very well, start dropping your reviews on this community if you've learned 1 or 2 things so far. Okay, whilst we are doing this, and I'll be, walking us through the setup process. This is not a fully affiliated program with Binget, but we very much have a current ongoing affiliation program with the BingX platform, which is also an exchange for you to trade crypto assets. In fact, that will be the platform where we are performing all of these guides through. So I know you might have Binance, I know you might have Bybit, or you don't have. Very well. Please, kindly drop the link to the BingX sign up link. So persons over here can use that link, sign up, create their BingX account, or get their BingX account, or basically, please, you can just go through your Play Store and download the app or something. But I want you to have that so that when I'm sharing what I'm sharing and speaking some English, maybe most likely at the end of the discussion you can now go through the app and also see and understand some of those things. Please, you can be doing that while I am performing this change and switch